And we start with the news that the US Federal Reserve has increased the key interest rate for the first time since 2006. It's a momentous decision as the rate has been at unprecedented low levels since the global financial crisis. For more, let's connect to our Shin Se who is standing by for us at our news center. Se.
Yes, Mark, after 7 years of rock bottom rates, at last there is a liftoff. It was widely expected, but the Federal Reserve announced within the last 2 hours or so that it will increase its benchmark rate by 1/4 of a percentage point. Shortly after the announcement, Fed Chair Janet Yellen gave a press conference laying out the reasons behind the decision.
The committee judged that a modest increase in the federal funds rate target is now appropriate, recognizing that even after this increase, monetary policy remains accommodative. And it reflects the committee's confidence that the economy will continue to strengthen.
Now, the Federal Open Market Committee judged that the U.S. economy and the labor market is healthy enough to begin the process of normalizing rates, recovering from the worst financial crisis since the Great Depression. Now, the U.S. Central Bank has kept its benchmark rate near zero since December 2008 as a show of effort to stimulate the economy and restore confidence in the financial markets. The U.S. labor market recently added 211,000 jobs in November, and there's confidence that the inflation is starting to climb to the Fed's target rate of 2%.
Now, a lot of people had seen this announcement coming, but how is Wall Street reacting to the news?
Well, minutes after the announcement, U.S. stocks have jumped with the Dow Jones Industrial Average going up some 250 points, or 60 points, or 0.3%, and the S&P 500 index going up 0.5% higher. And as of a few minutes ago, the Dow was up 255 points, or 1.2% up, and the S&P was up 1.4%. Now, in the coming few hours, we'll see how Korea's stock market and other Asian markets will react too.
Yeah, it's certainly going to be interesting to see. Korea's benchmark Kospi went up by almost 2% yesterday in anticipation of this decision. Now, this is going to be a gradual increase, is what Yellen says. How are analysts expecting this to unfold in the coming months and years?
Yes, the Fed's policymakers say they expect the short-term rate to stand at 1.38%, or rather 1.5% by the end of 2016. Now, they forecast that number to increase to 2.5% by the end of 2017 and will not get close to normal levels of around 3.5% until 2018. Now, that comes on the back of expectations that the economy will improve, growing 2.4% next year, with the unemployment rate falling to the 4% range. Mark?
Well, thank you very much, Semin, for that report. And of course, we'll be bringing you the updates on how the Korean financial market reacts to that news out of the Federal Reserve today, that interest rates have gone up to 0.25% from today.